What is the best strategy to buy Tesla stock? How do you know what stock to buy and when to buy it? What stocks am I buying? And did Tesla make the cut? I'll answer those questions and show you my blueprint to buy stocks, starting right now. Welcome back everyone, and in this video we're going to cover the simple 3-step buying strategy I use. And I'm also going to tell you the 6 stocks I'm targeting and why I chose each of those stocks. And my last one may be a little bit controversial and create some debate. But isn't that what the internet was invented for? There have been a ton of requests for this video, so I appreciate all the feedback, but I wanted to make sure I did this right. And if you haven't watched my previous video on the market bottom, make sure you check that out as these 2 videos tie together. But do that later. I think if you watch it right now, it kills the YouTube algorithm stuff, whatever. Yeah, I hate algorithms. Just watch this one, then subscribe if you aren't a subscriber, and everyone out there hit the like button. And then it's safe to go watch the other video. There's actually a slide at the end of this video that you can just click on, it'll take you straight to that video. Now before we get too far along, just remember this is for entertainment purposes only. I'm not giving you financial advice, I'm not a professional, I'm actually an idiot, so you should not listen to me. So let's talk about the buying strategy I use. There are 3 steps to my buying strategy. The hardest part of investing, at least from what I see in others, is the emotional side of it. People will have a great plan, have done a ton of great analysis, but they absolutely lose their brains when emotions or Facebook or social media get in the way. But regardless of where you fall on that, in the end, I like to keep it simple. So keeping with that theme, I'm gonna give you an easy blueprint to follow without all the technical jargon and without getting too crazy with the analysis. Step number 1, select great companies you want to buy and hold for the next 5 to 10 years. And take notice, I said the next 5 to 10 years, not the next 5 days or the next 5 hours. I'm a long-term investor, not a day trader. Way too much craziness for me with all that stuff. I got rid of all my crazy girlfriends a long time ago, so I don't want to revisit that at all in my investing. Not up in here. During huge downturns like we're having right now, you can go after spectacular, proven companies at discounts you'd never be able to get otherwise. I personally look for companies with strong balance sheets, enough cash to operate during a depression economy if that happens, low levels of debt compared to others in their industry, and the ability to maneuver capital easily in a market downturn. If the company has all these, it provides me with protection during downturns, and it allows the company to really expand during the good times. I also look for companies that are industry leaders and companies that are fundamental to our lives. You know, companies with stuff we just can't live without. I also try to mix in and allocate some funds to a growth company or a company that's just inordinately beaten down. But at a minimum, they need to at least have some of the fundamentals we just mentioned. The other big point I want to hammer home is the 5 to 10 year view of the stock. I see a lot of people freaking out on what really are small moves on a 5 to 10 year horizon. Who cares if you bought Tesla at 180, 480, or even 700 if you believe and your analysis shows that it will be worth $1,500 in 5 years. I get that FOMO is real, but if your horizon is 5 to 10 years, it really eliminates FOMO because the time frame is just so great. And here's a little secret to solving FOMO forever. Subscribe to my channel and like the video. I didn't say what FOMO I was solving, I just said I had a secret about solving FOMO. Just happens to be that. But keeping a long-term perspective is how the greatest investor to ever invest. Too many invest in one sentence. I don't have social media for this reason. It's amazing how stressed, angry, sad, FOMO-ridden some of my friends are due to social media. Having said that, I have thought about opening a private group where we can just talk about actual trades, strategies, and positions, and all kinds of other things like that specifically. Obviously, I need some sort of barrier to entry to keep it private and also to keep out all the trolls. They're all over the internet, we all know that. But this would be a serious group of actual investors looking to bounce trade ideas and strategies off each other, talk about the market and investing in general, and share some of our wins and some of our losses so that way we can all learn from each other. So comment down below and let me know if there's any interest out there. And let me know how to actually accomplish this. What format would you guys want to see that in? Even if I have to get social media to do it. But just for you guys. And no, I won't post selfies. Step number 2, identify your buy point. You need to identify your buying point where you are comfortable jumping in. This is different for everyone, and if you're afraid to lose money in the short term, then the stock market just may not be for you. You may have a specific price in mind. or you could have a buy point based on some other event, or you could just be copying off a YouTuber's paper. Yeah, I'm looking at you, yeah. In the end, it's up to you to decide what makes sense for you and your investing goals. Now that you know my thoughts on where I feel the bottom will start to materialize from my last video, you know that no one can call a bottom, and you can see the base for my second step in my strategy. I'm just strictly identifying a point or an event to start executing trades. And in this particular market, that would be having either a cure, a vaccine, or start seeing some containment of the illness. Again, this is just my opinion and where I personally am comfortable at, not financial advice on where you need to jump in. The perfect answer to this question in the end is where you personally feel comfortable investing. Now, I will throw in a small caveat here. This is all subject to change, but hear me out before you start going crazy. Don't be so rigid that you cannot deviate from your plan when necessary. It's why I put out a weekly strategy video for you. I assess, reassess, and analyze over the entire weekend. There could be some unforeseen event that may accelerate my buying or cause me to pause my buying altogether. Who saw the illness having this impact? Probably no one. And if you did, you probably aren't listening to me because you're on a beach right now or some private island counting your millions. The rest of us normal people who didn't see the illness coming need a plan, and if something does come up, we need to reassess and act accordingly. Step number 3, start your buying sequence. After I have my buy signal, I will start my buying sequence. I'm not going all in all at once. I will just start picking up my selected targets in batches. My method of buying is essentially a modified version of dollar cost averaging. Here's a simple example of what it looks like. I will make my initial buys there at buy number 1, then probably lose money, but pick up more when the price drops lower at buy number 2. And after it bottoms, it inevitably will eventually move back up, and I will buy at number 3, and I'll finish my buys as it rises up at buy number 4, and the stock will keep moving from there. That's oversimplified, I know, but hopefully you get the point and understand what I'm doing. I don't care if I bought Tesla at 500 instead of the bottom at 350 if it goes up to $1,000. Sure, I could have made more, but I took action and executed my plan. I'd be willing to bet that most people will sit on the sidelines until it goes back up to 600, then 700, then 800, and so on. Then they'll give the excuse,
oh man, I missed out.
Because they're busy trying to trade on headlines and hype and all kinds of other things, instead of using solid long-term investing fundamentals along with a well thought out plan to execute on. In the end, I just want to execute a plan where I bought some stocks at prices that will look like bargains in 5 to 10 years. That's it. All right, let's talk about the 6 targets I will be buying utilizing the strategy we just talked about. I'll walk you through the highlights of each company, and I'll explain why these companies make sense to me and my investing goals. Remember the criteria we just went over? Strong balance sheets, industry leaders, and products we can't live without. So we'll just keep it simple, go with those 3. That looks weird, doesn't it? Sorry. And the first company on my list is Google. You don't search for things, you Google it, right? Google is vital to everyday life. There is no better search engine, or maps for your phone, or satellite images of the Earth. So let's take a quick look at their balance sheet and see if we can get that 3rd box checked. All right, as you look at Google's balance sheet right there, look at that ridiculous amount of cash that they have on hand. It's $119 billion, with a B, billion dollars. Yeah, it'd be nice to have that much cash in my bank account. Total assets at $275 billion next to total liabilities of only $74 billion. Google essentially could go years, maybe even decades before running out of cash with no revenue coming in at all. So they're just an incredible company with an incredible balance sheet, and I really think they're going to do just fine over the course of this downturn. The second company on my list is Amazon. They have done amazing during this downturn. Just look at this chart right here during just this downturn. Look at how much better they've done than the rest of the market. They're vital to everyday life, especially in my household. There's always a freaking Prime box sitting out there on the doorstep. It's ridiculous. So let's take a quick look at Amazon's balance sheet. Keep in mind when I'm looking at Amazon's balance sheet, I'm not comparing it against Google's. They're not competitors, they're not in the same industry. So cash on hand, again, $55 billion, $225 billion in total assets. Remember, they got a lot of those trucks, a lot of jets, a lot of other stuff out there. And total liabilities are sitting out there at $163 billion as well. If you can't go to the store, where are you going to get your stuff from? Probably Amazon. The next company I'm looking to pick up is Apple. If you use Apple products, it's hard to use anything else. It's almost like a niche of its own. I don't know how else to explain that. They continue to innovate with some of the best products out there, And I personally exclusively use Apple products. Apple has a balance sheet almost as good as Google, so let's take a look at that. As you guys can see right there, there's more than $100 billion in cash, up from $66 billion just the year before. So they managed to put $34 billion in cash in their pocket over 1 year. That's incredible. It shows you how profitable they actually are. Total assets are at $338 billion and liabilities are at $248 billion. Again, another really strong balance sheet with a lot of cash to help them float through this downturn. The next stock on my list is Facebook. I don't use it at all. Don't have any interest in social media, but I think everybody else in the world has a Facebook account. At least it feels that way. But what really attracts me to Facebook is their balance sheet. So let's take a look at that. Again, we're looking at another ridiculous balance sheet. $54 billion sitting there in cash for Mark Zuckerberg to spend. Total assets are at $133 billion. But look at those liabilities, guys. Only $32 billion. So they could easily pay that off and still have plenty of cash to take care of everything for the foreseeable future. So Facebook's gonna be just fine during this downturn. I guess if we do start a private group for this channel, it'd have to be on Facebook, so let me know. Support the stock I'm buying. The fifth stock on my list is Tesla. Come on guys, you didn't actually think they weren't gonna be on my list, did you? I like my stocks frothy, and it doesn't get much frothier than Tesla. Like many of you out there, I do believe that is the future. The future of cars, the future of alternative energy, space, and who knows what else. Only capital and the illness is going to slow them down. Tesla has been building their balance sheet over the past year, just in time for this downturn. So as you can see right there, I went on ahead and I made the adjustment, making that 8 billion instead of 6 billion, which is what they actually reported at the end of 2019. But you see that's up from 3 billion the year prior. So they managed to get $5 billion more cash into their hands right before this downturn. Total assets of $34 billion and liabilities of $26 billion. And let's not debate this, the autos make up the vast majority of Tesla's revenue for right now. Their balance sheet looks incredible compared to their competitors. They're positioned to weather this downturn and to have the cash to survive even if everything goes to zero and nobody buys cars for 6 months or a year. And the final company I'm targeting is Carnival Cruise Lines. I could see this generating some debate. Short term, this is going to be a terrible call and I won't allocate a lot of money to them. However, I don't believe the cruise industry is going to die. And before the illness, they had the best balance sheet of any of the cruise stocks. So let's take a look at their balance sheet real quick. So you can see right there for Carnival, they have $518 million on hand right now. Total assets of $45 billion and liabilities of only $19 billion. They have a much lower debt ratio than everybody else in the cruise line industry. And they also have one of the largest cash positions. And companies that were taking care of their balance sheet before the downturn, like Carnival, are going to come out of it looking much better on the back end. There are literally hundreds of stocks that make great investments. But these are the stocks that I'm looking at buying and how I plan to buy them. So comment down below and let us know what your strategy is. What stocks are you looking to pick up? Am I crazy? Let me know down below, and to avoid FOMO, please subscribe, go ahead and hit that little notifications bell, and also if you're feeling really generous today, go ahead and give the video a thumbs up as well.